الرحمن الرحيم. Assalamu alaikum wa rahmatullahi wa barakatuh. I want to thank the masjid and the board for allowing us to be here today. They are not endorsing us, but they are allowing us to do an educational presentation on Islamic finance, on how it works here in the United States, along with a little bit about UIF. My name is Wissam Berjawi. I've been with UIF for 17 years, currently the Vice President of Sales. And inshallah, the purpose of this presentation is to educate you on how it works. And at the end of the presentation, inshallah, we will take questions about our program as well. Now, we will, inshallah, pass around a sign-in sheet. So if you would like an electronic book by Mufti Taqi Osmani on Islamic finance, please fill out the registration form and for it to be legible so that the email doesn't bounce back as well. Jazakallah khair. May Allah give you the best of teas in Jannah, inshallah. Say Ameen. Jazakallah khair. Now, so if we can you see the screen? Or is it a little bit too light? It's light. Can we have another light down or turned off by any chance? Just so that the screen can be seen a little bit better. And subhanAllah, you know, Maghrib time now is so early, 4:45, 5 o'clock. This is, soon Ramadan will be this early too, right? Instead of breaking fast 8, 9 p.m., it'll be 4:30 sometime in the next few years. So, alhamdulillah, as I mentioned, I'm with UIF, but how many of you know of UIF? Can I get a show of hands? 1, 2, 3, 4, 5. MashaAllah, okay, a good amount of the community. Alhamdulillah, that means we are doing our best, inshallah, to spread awareness of Islamic finance, which is a great thing. But alhamdulillah, some of you may have not heard of UIF, and we've been around for over 20 years. Okay, we are a private company. We are a subsidiary of a community bank based in Michigan called University Bank, but UIF itself is not a bank. Okay, we have started off with home financing, and currently we are offering home financing in these 32 states that you have over here. Now, the reason why we are operational in 32 states and not all 50 states is because we do not offer an interest contract. If we did offer an interest contract, it would be a lot easier to be operational in all 50 states. But because we offer a Sharia-compliant contract that is different than a traditional interest contract, we have to make sure that our program works within each state, because every state has their own rules and regulations when it comes to finance. Now, we started off with home financing. We've done over $5 billion of residential home financing and over $100 million in commercial real estate financing. So with that, alhamdulillah, we started off with those main projects of financing real estate. But our goal is to be the #1 provider for your Islamic financing and investing needs. This is UIF's goal, to be that one-stop shop. So when you think of anything to do with financing and investing, inshallah, we hope that we come to mind first to be able to assist you. So while we first started off with home financing, and this is a basic need of every human, which is homes and living, right? We have grown out of that. We want you, as I mentioned, to be that one-stop shop, not just home financing. We have several products that differentiates us from the competition that is out there, and that is why UIF is the #1 Islamic financing company in the United States. So alhamdulillah, we offer 4 main products. We have, as I mentioned, the home financing. We have commercial real estate financing. We have vehicle financing in some states. And the question we get a lot is, where do you get your money from? Do you borrow your money from a bank, and so on and so forth? And to give you a sneak preview, the answer is no. We do not borrow any money from any bank, and we don't deal in interest. One of the sources of our investments is from you, the community, because we do offer a halal savings account. And I will go through these different products as well. Now, when it comes to home financing, we provide residential home financing for residential properties from a 1-unit all the way up to a 4-unit property. If you're looking to purchase a home to live in, a second home, or an investment property. If you're looking to refinance, whether you have an existing traditional mortgage, or if you have another Islamic financing company, we are able to refinance that. Or if you're looking to do a cash out and take out some equity out of your home or properties, we're able to do that as well. And in some states, we offer construction financing, but we don't offer construction financing here in New Jersey, so I will not be going over that. But we also do offer commercial real estate financing. Now, commercial real estate financing is a property that could be a residential property, 5 units or more, or a commercial property such as a shopping center, a medical office, a masjid, an Islamic school, and alhamdulillah. And one of the masjids that we actually helped finance is actually this building right here. ICPC Clifton was helped financed by UIF as well. So it's a nice coincidence to be back here. So alhamdulillah. And we do other types of commercial properties, such as car washes and such. Now, we are able to do the financing of the actual real estate part of it, but not the business part of it. What do I mean by that? So I just gave the example of a car wash. So if you're looking to purchase the physical real estate part of it, we can do, but we cannot finance the equipment inside of it, okay? So this is important. For example, a medical office, we can purchase the real estate, but we're not able to finance the medical equipment and so on. So we do commercial real estate financing. In certain states, we offer vehicle financing, which is in Michigan, Ohio, Illinois. Soon, inshallah, will be Texas. And then I'm hoping that in sometime in 2025, we'll bring it to the East Coast vehicle financing, including New Jersey, because that is a big need of the community. Car prices have gone up, and many of the manufacturers' pricing specials with the 0% interest and such have gone away. So we will be able to offer vehicle financing up to $125,000 per vehicle, up to 7 years of financing with that. So please stay tuned for our vehicle financing that is to come. And then the question that we get often that I mentioned is our savings account. Where do you get your money from, right? This is a question people have. Do you deal in interest? Do you deal with the bank? And so on and so forth. Alhamdulillah, we don't deal in any interest. We have investors that have invested in UIF from the beginning, Muslim and non-Muslim investors. And we also have depositors just like you and I, who have actually opened up savings accounts that UIF uses to fund these transactions. So this halal savings account, the way it works is that you put money into it. We use these to finance commercial real estate, residential real estate, and vehicle financing. And then we give you a percentage of profit back. It is a profit-sharing account. So it is not like a traditional deposit account where your money could be used for anything, right? With us, it is only used for our halal investments. No other investments are used. And since we've been doing this for over 20 years, we have a track record on what our returns have been, so that we can tell you what we anticipate to pay you as a profit for investing with us and such. Now, with our deposit account, since it is a deposit account, you do have FDIC insurance up to $250,000 if you invest with us or deposit with us for a single person. And if it is multiple people on the account, it could be up to $500,000 of FDIC insurance. You also have access to the mobile app. So similar to if you have a banking app right now, you get to see your transactions, you get alerts on there, and so on and so forth. You can also transfer between your local bank account here and our deposit account as well. You also, if you have the savings account, you also get an ATM card in which you can make withdrawals if you would like. Okay, so it's very functional. I use it myself. I have a savings account, and I put money in. I actually needed to take some money out, so I did a transfer right over the phone, and it took 1 day for it to transfer to my local bank. Okay, so it's fully functional. You can add money in at any time. You can take money out at any time as well with the savings account. The minimum to open up is $500. you can deposit up to $2 million, okay? Now, because we have a track record, as I mentioned, of what we've done in the past, our current profit that you would be receiving is around 4%, okay? So this is a good estimate of what you can anticipate the profit would be if you had a deposit account with us. So if you're looking to open up a deposit account, please reach out to Brother Mazer. The brother here, he looks like my bodyguard, I think. He's standing up here. But mashallah, please reach out to him, and I'll have his contact information given as well. He will be able to assist you and put you in touch with our deposit team as well. Now, to get into Islamic finance, well, this is a slide I should have had up, to be honest with you, with regards to the deposit accounts. But it's pretty much what I had gone over, except that with our deposit account, there's two types. There's a savings account that I mentioned. You could put money in and take money out. And there's another account called time deposit account, which simply is the same program, except that instead of having the flexibility of taking money in and out, you're holding it with us for 1 year, 3 years, or 5 years. That is the difference, and because of that, the investment profit that you'll get is slightly more than the savings account. That's really the difference. But with the time deposit account, you cannot add more money to it. So let's just say you put in $50,000, for example, into the time deposit account, and you wanted to add money in, you can't. You need to start another account. With the savings account, you can add and subtract freely, yarhamkallah. So keep that in mind. So that is really the difference between the two. Now, when it comes into Islamic finance, many people ask, brother, what is the difference, right? It's the same thing. At the end of the day, I'm going to be paying the same. I'm going to own the home. What's the difference, right? Are we just playing word games here? It's a very good question, right? And sometimes I get the analogy, hey, brother Wissam, it's you hold your ear like this or you hold your ear like this. It's the same thing, right? This is good. But once again, if I'm talking to you and I'm going like this, you're not going to think anything of it. But if I do this, you're going to tell me, Wissam, go get yourself checked out at the doctor. Something's wrong with you, right? Why? Because there's a right way of doing things and a wrong way of doing things, right? This is the truth. Similarly, if I tell you, okay, brothers, after the presentation, I cannot stay long because I have to get home to my wife and kids. You're going to say, okay, khair inshallah, safe travels. But if I tell you I have to go home to my girlfriend and kids, what are you going to say? Astaghfirullah, right? Rightfully so. But what's the difference? You're going to go home, you're going to have the same good times, I'm hoping inshallah, right? And you're going to have the same food, you're going to have, the same bills to pay and so on and so forth. But the difference is the aqd al-jawaz, the marriage contract, right? The blessing and the barakah with it, right? So it's not just the outcome that matters. It's the process and the paperwork. And I want to give you one other example that is different with home financing, is a personal example that happened with me. A few years ago, I was traveling overseas, and when I came back, or coming back, I said, let me get my 2 daughters at that time a gift. So I said, let me get them a gold bracelet. I got the gold bracelets, came home, very excited. Where's my girls? Ba, 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 ba. Here's the bracelets, and guess what? The bracelets don't fit. Well, I'm not going to travel overseas just to change out the bracelets. It doesn't make sense. So I called up the local Muslim jeweler. The sister picked up who owns the store. She said, yes, I have, gold bracelets. Come see what you like. I said, okay, great. But I said, I have this bracelet that I have. She said, okay, let me see what it is. She waited. She said it's $1,000 that she would give me for the bracelet. I said, that's great, but I don't want the money. I want a replacement so that I can give my daughters the gift. She said, well, see what you like. I looked for the bracelet, and I came up with the bracelet. She waited. She said it's $800. So normally, what would happen? My bracelet is $1,000. The one I want is $800. Normally, there would be a swap. She'd give me $200, and I would leave. But that's not what she did. What did she do first? She purchased my bracelets for $1,000. She gave me the cash, and she gave me the receipt. And then she rang me up for a second transaction for $800. I gave her the cash. She gave me the receipt and the bracelets. Same outcome. I wound up with the bracelets I wanted and the $200 in my pocket. But 2 different transactions. Why? Because from a Sharia perspective, you cannot trade an inferior product for a superior product. Same outcome, right? One is halal, one is not. So very important. When it comes to home financing, the process and the paperwork is different. With a traditional mortgage company, you're going to sign an interest promissory note. With UIF, you do not sign an interest promissory note. What you do is you sign a partnership agreement, a declining balance agreement, okay? So this is very different. With an interest contract, it says that you promise to repay them back the money plus interest, okay? With us, we make a profit through a physical asset, not through lending of money. And to go through our product, you will see in the other slide, it is a partnership agreement. Now, I've been doing this for 17 years, but I am not a sheikh and I am not a mufti to give fatwas. I've been called many names in my life, but not sheikh or mufti. So we need the real scholars to review and approve the program. And if you look on my left over here, the scholars, Mufti Abdullah Nana, Sheikh Nizam Yaqubi, the late Professor Sheikh Hussein Hamid Hassan, and Abdul Bari Mash'al. Those scholars are world-renowned in Islamic finance, right? So we have many sheikhs, and some of them are specialized in certain things. These scholars focus on Islamic finance, not just here in the United States, but some of them are on international boards of other companies as well, to give us a peace of mind that the product is Sharia compliant. And then we have many other sheikhs that have used our product as well for their own home, which gives me a comfort working here and also using the product myself as well and for the community. And if you go on our website, myuif.com, you'll have a greater list of testimonials from sheikhs as well, many of them across the country. Now, how does UIF's product work when it comes to home financing? Let's say, for example, you are looking to purchase a home. You will call Mazer to get pre-qualified. Once you get pre-qualified, he will give you a pre-qualification letter. You will shop around for a home, and within 30 to 45 days, we will close on the property and purchase the home together with you. And then throughout a period of time, you will buy out our share of the property. For example, let's say the home is $100,000. And let's say you are going to put 10% down. UIF is going to purchase the other 90% with you and co-own it together 100%. Now in this example, you own 10%, but you're going to use the house 100%. Every month you're going to make a payment, and part of your payment is going to go towards buying out our ownership share. So you have 10%, you make a payment, next month it goes up to 11%, 12%, 15%, 20%, 40, 50, 60, 80, until you become 100% owner of the property. Now, in this example, from the first day, the example is you have 10% ownership, you're using the house 100%, so you are going to pay us. How we make a profit in a Sharia compliant way is when you use the house, you are paying us a rent for using our portion of the home. So similar to if you don't own a home now, you are renting a house now, you are paying the landlord a rent for using his or her home, okay? Similarly, we make a profit from the rent of the home. That is the only profit that we make in this transaction. For example, if the payment is $1,000, and from that $1,000, $300 is going towards buying out our share of the home, and $700 is going towards the rent or the profit that UIF makes. Now, next month, your payment is still $1,000, but instead of $300 going towards the home, it's going to be, let's say, $305. Why? Because instead of 10% ownership, now you have 11% ownership and 12%. So the payment stays fixed at, let's say, $1,000, but instead of $300 going towards the home, it is now $305, and the rent goes down from $700 to $695, and so on and so forth until you are 100% owner. The rent keeps going down every month, and the amount that goes towards buying out the share goes up until you are 100% owner of the property. So this is how UIF makes a profit in its partnership agreement on a physical asset, not through lending of money. Now, as I started to go through the process of how this works, first you would get pre-qualified. Speak with Mazer to see what you would be qualified for. The reason is that you need to, first and foremost for yourself, to know how much you can afford and be qualified for. Two, when you go look for a home with the real estate agent, the agent's going to want to see that you're qualified and you're not wasting your time looking for a home. And thirdly, the seller wants to make sure that if they accept your offer, there's a good likelihood that you're going to close on the home. So once you speak to Mazer, you will shop around with the real estate agent. Once you have a signed sales contract, Mazer will let you know what documents he needs from you, such as pay stubs, bank statements, or W-2s, and so on. He will then submit them to what's called the underwriting team to review them, and then the whole process to make sure that, hey, this makes sense, but we still need additional documents from you until we close, takes around 30 days or so. So that is the standard process of purchasing a home. Now, in this particular slide, I'm going to ask a question or two to make sure everyone is awake, but it is very informative, regardless if you use our services or not. Excuse me. Now, in terms of qualifying, we look at three main criteria. We look at your income, we look at your credit, and we look at your assets or down payment. Roughly speaking, in terms of income, if you have no liabilities, no car loan, no student loan, no credit card debt, roughly speaking, for every $25,000 of income that you show on your tax returns, you may qualify for about $100,000 in financing, okay? That's $25,000 that you show in income. So if I am looking to finance a home for $300,000, what should my income be around? $75,000, correct, right? So this is a good general rule of thumb to use. And the reason why there's a range is a few things. We look at your total payment to get you to qualify. So property taxes vary from town to town. If you're purchasing a condo or a townhouse, there's association fees and so on. So all of that has to get factored in. Now, when it comes to income, if you work for a company, okay, you are salary employed, then we will take your gross income. So if my income salary is $75,000, then that is what will be used to qualify. If I'm self-employed, then we look at your tax returns and we take the net income. So, for example, if you are in the transportation business, you drive an Uber or Lyft, and now your income is $120,000 gross income, and then after all your expenses, now you're making $20,000 or $30,000, right? There's a lot of expenses or deductions. So in this case, we will take the $20,000 or $30,000 to use to qualify. Now, if you are in the transportation business, reach out to us and let us review your tax returns as well. There are certain expenses that we can add back to your income, okay, such as depreciation and business mileage expense. So I've seen drivers that come in and they qualify, their starting net income is $20,000 or $30,000, and then when we add back their expenses, now their income is $60,000 or $70,000. Okay, so they can qualify for more. Or they can also get a cosigner, someone who has good credit, income, and not too much liabilities, to cosign as well. We see this a lot. Sometimes it's husband and wife, sometimes it's the child and the parent, sometimes it's a friend. You can add anyone as a cosigner as well to help you qualify. And if it so happens to be a multifamily home, a 2, 3, or 4 unit home, then from there, you can also use rental income from the other unit to help you qualify. Next, the next two are kind of connected in a way. We look at your credit score. The higher the credit, the lower the down payment. The lower the credit score, the higher the down payment, right? Credit score is a measure of risk. So the higher your credit score, the less risk. Lower credit score, higher down payment. On a single-family home, primary residence, okay, the minimum down payment could be as low as 3% down. On a single-family primary residence, as low as 3% down. On a multifamily, which is 2 to 4 unit primary residence, the minimum down payment can be as low as 5% down. And of course, the more you put down, the better it is, okay? Now, when it comes to down payment, as I mentioned, 3%, 5%, you can put as much as you'd like. On a primary residence, you should have the money. We're gonna ask you for 2 months of bank statements. If the money is not in there within or before the 2 months, we're gonna ask you where the money came from. You're gonna have a deposit there. And so keep in mind, no cash deposits, and you can get gift funds from family members. Could be a check that they give you, a personal check, or they can wire the money from their personal account, a family member, a cousin, an uncle, a brother, a parent, your spouse can write you a check, okay? So we don't do DNA tests to find out who your relative is, right, brothers? So, you know, you can give gift funds from family members, but no cash deposits. Please, it's very important, inshallah. No cash deposits, because we cannot use cash. Okay, so we can use gift funds and such. Yes, exactly. SubhanAllah. Cash has changed. Now they use crypto. So, but you know, with that, keep in mind. Now I keep saying primary residence, primary residence. So let me also explain to you in the industry the 3 different types of occupancy. There's primary residence, there's second home, and there's investment property. Those are the 3 different types. So, primary residence means the one who's applying for the home financing is the one who's going to live in the property, is going to move into the property within 60 days, and the intention is to live there for at least 1 year. Okay? Primary residence, I'm going to move in within 60 days, I'm applying, and I plan to live there for 1 year, at least a year. That is a primary residence. Then you have a second home. Second home means the one who is applying is going to live in that home several months out of the year. So if we were to move to Florida before the storms and hurricanes, a few months out of the year, that would be a second home. And then you have investment property. Investment property is everything else. Most of you people think of investment property of a house I'm going to buy and I'm going to rent it out. That is true. That is an investment property. But it can be also, I live at this home, but the house next door to me is for sale and I want to buy it for my sister, for example. This is not a primary residence. It is a second home. It is not. It is an investment property. Let's just say if my son is going to college and I want to buy a house for him to live in instead of him living in the dorm. This is an investment property, unless I put my son on the application. So let me ask you this question. Let's just say if my wife and kids are going to move to Florida, but I'm going to stay here in New Jersey, okay? What type of residence would this be? For me, if I'm applying, would it be a primary residence, second home, or investment property? Second home. Any other responses? So, someone said investment. So, it could be either or, second home, which would probably how we would process the application as a second home, but certainly can be an investment property as well, okay? But it is not a primary residence. That's important. Now, let me stress the difference. A primary residence, you can put a lower down payment, and you can get gift funds. Remember, primary residence, 3 to 5% down. Second home, only minimum is 15% down, not 3 or 5%. So if I wanted to purchase that home as a primary residence in Florida, my wife would have to be on the application with me. Okay? That's how that would work. If she's not on the application for whatever reason, she has no credit, she has bad credit, whatever the case is, it's not a primary residence. It'll be a second home. Okay? Investment property, rahmakallah, second home, you can get gift funds, by the way. You can still get gift funds from family members. Second home. Investment property, minimum down is 15% on a single family or 25% down on a multi-unit family. And there is no gift funds allowed on an investment property. Why? Because the truth is no one's going to gift you money to go invest. They may lend you money, but they want their money back, right? So that is the difference. So keep that in mind, inshallah, when you are looking for a home. And if you have any questions, always speak to Mazer. Why? We're here to help, inshallah, right? If the deal gets done, everyone benefits, right? So let us know. We'll see what's the best way to structure the transaction to get you the best pricing and to get the deal closed, inshallah. Now, with that, I will start to wrap up the presentation and just some of the highlights of UIF and what has helped, alhamdulillah, make us the #1 Islamic financing company in the U.S. One is the support of the community and using our services. With that, we always stress customer service. Very, very important. Why is that? It's because we have this high standards as Muslims that we need to achieve, right? Not this kind of quote-unquote back home mentality, right? Yalla, Mashiach, just get it to work, however it works. And it's not how Muslims are. We do have standards and we have to work towards the best. And so, it is important that we elevate that all the time. Mazer knows whenever I speak to him that we always stress to customers, if you call us, email us, text us, we will do our best to respond to every message whenever possible and as quickly as possible. Even more important than customer services, Sharia compliance, right? To make sure it is halal. If it's not halal, then what's the point of us being here? And that's where we don't take any shortcuts as well. And then thirdly is competitive pricing. I've been doing this for many years, and I can tell you everybody is Sharia compliant until it costs $1 more. Whenever you find something cheaper, as they say, money talks, right? And then the rest goes on. Right? We want to make sure that we are competitive in price. Very important that we have a halal product that is competitive. Now, when you compare us to other Islamic financing companies, we are amongst the lowest. And when you compare us to traditional mortgage companies, we are right in the middle. You'll find some that are higher than us, and you'll find some that are lower than us. We will do our best always to be as low as and competitive as possible. We also have community givebacks that we do. We sponsor many local events in the community, in the masjids, Islamic schools. We also have an Imam's Generational Scholarship where we give up to $50,000 a year to the children of Imams to go to college, because we know that the Imams work tirelessly and they don't get paid much, right? But they still have a lot of responsibilities. So we try to help out whenever possible as well. And then last but not least, we don't charge any extra monthly fees. Some other Islamic finance companies do charge, right? We don't charge you because we're not trying to make additional profit. We're trying to be as competitive as possible. And alhamdulillah, this is why we've been ranked #1 9 years in a row by Islamic Finance News magazine. And the voting is up now as well. Not the election that just passed, but for Islamic Financing News magazine. So if you are able to go on our website and hopefully vote for us, we'd appreciate that as well. And also, last but not least, I like to say Sheikh Google. Anywhere you go, you always look at the Google reviews. We have great Google reviews as well from the community. These are not from 1 or 2 stars of reviews. These are altogether thousands of reviews from all of our different offices across the country. Does that mean that we are perfect? Absolutely not. Do we make mistakes every day? My wife reminds me of the mistakes I do all the time, right? So we are perfect. We are not perfect, but we strive to do the best we can constantly, right? It is always about improving yourself. And whenever possible, we will always make it right as much as we can, inshallah. And so with that, I want to open the floor for questions and answers as well. And then we have Brother Mazer. His phone number is over here, and I believe Mazer can also take text messages. If you don't want to ask questions, you certainly can, either from the brother side or sister side, and he's also available to take text messages as well. So we will start with questions. Whoever has questions, brothers or sisters, inshallah. Yes, brother. So the brother's question is that in our partnership model, and we co-own the property together, do we go on the deed of the property? It's a very good question. And their answer is no, we do not go on the deed with you, but our partnership agreement gets recorded in the township as well, and that represents our partnership with you. The reason why we don't go on the deed of the property is for simplicity and not to complicate things for you later on. What do I mean? Now, if you're buying a home in New Jersey, for example, there is a property tax rebate that you may get called the Anchor Program. The Anchor Program, if you are not the only one in there, you'll get a portion of the tax deduction. Okay, you won't get the full tax deduction, number one. If you are another state, the same thing. You may have to pay another transfer tax. Or when you go to sell the home, you're going to need us to sign the deed over as well. So to make the process simpler, we just have our partnership agreement, which represents our co-ownership, recorded, but you're the only one on the deed. Sisters, any questions, inshallah? Yes, brother.
So you don't buy the house on your side and then don't transfer it to our side?
No. So what I'm thinking you're saying, the brother's saying is, are we buying the home first and selling it to you right after? And the answer to that is no, we don't. Now, it's a very good question. The reason why I say that is, in the United States, there are three main models of Islamic financing that is used. There is the ijara, there is the murabaha, and there is now the musharaka, those three. We at UIF, we used to offer at one point all three of them. We started off with the ijara, and the ijara is a lease to own. The financing company buys the property, it owns it 100%, and you're saving money until you have enough money to buy it. Up until that point, you are just renting from them, but you don't own the house. Once you have enough money to buy it all out, they transfer ownership to you, okay? The second is the murabaha. Murabaha is what you were explaining. I buy the house for $100,000, sell it to you for $120,000, and you pay me back in installments. Now you owe me $120,000. This is now a debt, okay? Similar to the phone. I buy this phone for, let's say, if I was cool enough, I'd have an iPhone, and let's say it's $1,000, okay? You're buying it from, let's say, Best Buy, and it is, let's say, you don't pay it up front, you pay $50 a month. But you own the phone right now. If you drop the phone and you crack the screen, you still have to pay back $1,000 to Best Buy. Or if you sell the phone for $1,500 on eBay, right, you keep the $500 profit and you still pay them back $1,000. That is the murabaha model, which we do not offer. And then there is the musharaka, in which I explained, right? So that is just the difference. This is why we do these presentations, to educate you on how the product works, because if I ask everyone, they'll give me a little bit of both. They'll mix them all in, and I think this and that, which is partly true, but it depends on which product is being used. Yes, brother. Okay. Sure. So the first question is that investment property, what is the minimum down payment? On a single family home, minimum down payment is 15% down. And if it's a multi-unit, 2 to 4 unit, the minimum down payment is 25%. Keep in mind, any property that we finance has to be in livable condition. So we don't do fix and flip properties and things of that sort. So, livable just means that, livable, right? When I purchased my first home, it was a 1978 home, and I'm pretty sure the guy never changed a screw in the house or a light bulb. It was the same old ugly yellow colors and so on, but it was livable, right? And so we were able to finance it. So keep that in mind, livable home. In terms of the tax rebate, anything you get is going to come to you. It's not going to come to UIF because you're going to be the only one on the deed. Yes. Inshallah. Yes, brother. Sure. Okay, it's a very good question. So the brother's question is that what if I can't make my payments? Worst case scenario. It doesn't matter the percentage that they have, 5%, 50%. And it's a good question because I was actually speaking to a brother on the way up who had the very same live situation. Live situation. And I'll tell you what happened in his situation. Now, your payment is due by the 1st of the month, okay? And then you have 15 days to pay. After the 15th of the month, we have a fixed $50 late payment fee. It doesn't matter if our ownership is $50,000 into the home or $2 million. It is just the administrative cost to follow up with you, emails, regular mail, phone calls, and so on, which is different than a traditional mortgage company. Traditional mortgage, they'll charge you 5% interest of whatever your monthly payment is. So if your monthly payment now is $2,000, your late payment fee is $100. $3,000 monthly payment, it's $150. With us, it's $50, doesn't matter. Because from a Sharia perspective, you cannot profit from a late payment. At the end of the year, we also donate this money to charity because our goal is not to profit from, but is to get people to pay on time. Now, if we keep going worst case scenario, $50 is not the issue, right? You have a hardship. Whenever you have a hardship, you should call us to see what we can do to assist you, okay? So some people, unfortunately, when they have a hard time or a hardship, they shut down. They don't communicate. That's the wrong thing to do. Reach out to us, okay? And then we can assist you in whatever way we can. And one of those, there's 3 outcomes. One is we can stop your payment. 2, we can lower your payment. Or 3, we can do nothing. Depending on your particular hardship, we will work with you to see whatever is the best outcome, whatever we can do to assist to get you out of that situation, inshallah, right? If we keep going worst case scenario, let's say nothing can be done. Then in this case, we tell you that to keep your promise to buy us out, you should sell the home. When you sell the home, you keep the profit for whatever it sells for, and you keep your promise to buy us out. If you don't do that and there's no payments coming in, then eventually we will follow state law and the house goes into foreclosure. In New Jersey, that's usually 2 to 4 years of non-payment, okay? With the particular brother I spoke with, he had a ton of equity. I think his balance was like 140 or 160, and his house is worth like 500. But he's having a financial hardship. He's not able to make his payments for his particular reason, and we were able to cut down his payment by over $1,500 around. So it was a good chunk of payment, you know, to help the brother out. So whenever we can, we will, right? It's no one benefits from the hardship. And we're not property managers, so we don't want to foreclose on the property either. That's not our goal. Our goal is to help you own the home as well. Wa iyyakum. Any other questions?
Sisters, don't be shy.
Yes, brother. It's a very good question. So the brother's question is, what is the term of your contract? We have a minimum of 10 years up to 30 years. So you have 10, 15, 20, and 30 years, okay? Most people go with the 30 years, not because they're going to pay it in 30 years, but because it's the lowest payment, and there is no prepayment penalty. So you could make an extra $100 a month automatic payment, or one-time payment a year, $20,000, $50,000. You would win the halal lotto, $200,000. You want to pay off quickly? You can. There is no prepayment penalty. You can send a check in. Once again, online, you have your online portal. You can make extra principal payments at any time as well and finish sooner. We've had people buy a house with us today. They own the home. 3 months later, they sell that other home and they want to buy us out completely in 3 months. We've had that done too. So there's no prepayment penalty whatsoever. That's a very good question. I knew that was coming. Alhamdulillah. So when you make your extra payment, right? So let's just say you make a payment, an extra $200 a month, okay? So your payment is $1,000 and you have an extra $200 payment. So what that will do is help you buy out our share sooner. So your payment will still stay $1,000, but instead of 30 years, now it may be 20 years, 15 years, 8 years, depending on how much extra payments you make. And it is always better to make your extra payments at the beginning. I'll give you an example. Let's just say you're going to pay an extra $200 a month, okay? And so at the end of the year, that's what, $2,400. It's better to put in $200 every month now instead of putting $2,400 at the end of the year, okay? This is what we normally do on a regular extra payment. Now, we have also the option to do what's called a recast. Recast is if you make a certain payment. What was the minimum payment, Mazer, for a recast? $250. La, habibi. What is the minimum amount that needs to be put in? $10,000. Very good. I want to make sure he's awake. We don't give any free passes. Remember, high standards, right? So, if you put at least $10,000 towards the payment, right, or more, you can do what's called a recast. Now, instead of the term period getting shortened from 30 years to 25 or 20, we can keep it 30 years, okay? But now your payment goes down from $1,000 to $800 or $900 or $700, whatever the case is, when it amortizes back to 30 years. That is called a recast. You can do so, at least $10,000 is needed. And there's a $250 administrative fee for that. Okay? Yes, brother. Sure. So it's a very good question. So the brother's asking, where are you getting your money for these transactions, right? So we have several sources of our to finance these transactions. We have investors that have invested in UIF, both Muslim and non-Muslim investors. We have the deposit accounts that I mentioned that I encourage everyone to look into. And then we have investors that invest in our contracts after the closing as well. So those are the three different sources that we have in terms of funding our transactions. Yes, brother. Mm-hmm. So the brother's question is our mortgages bought by Freddie Mac or Fannie Mae after the closing? And the answer is, it could be. So yes, they are one of our sources of investors after the closing. The terms and the conditions of our contract does not change if they do invest in our contracts. We also, what is different between us and most other companies out there, Islamic finance or even traditional mortgage companies, is that our sister company actually services our contract. So what does that mean? When you make your payment at the beginning of the month, someone has to collect it. It's not the investor. It's called the servicer. And so our sister company called Midwest Loan Services services our contract. So you can call me up, you can call Mazer up, and ask us questions because we know what's going on with your payments even after the closing. Because we never sell the servicing of it because it is our sister company. We've been there for 20 years the same way. Now, if we hold it, so the deposit accounts that I mentioned earlier, that's where we don't have Freddie Mac or Fannie Mae invested. We have it on our portfolio, and that is the profit that is spread for those that we hold on our books. Okay? Yes? It's a very good question. So the brother asked if, do you need to have credit in order to qualify, right? If you have no credit. So with everyone that applies, we do check their credit. If they don't have any credit when we pull it, that means nothing shows up. Nothing good, nothing bad. There's no credit. Then the minimum down payment would be 20%, number one. Number two, you would need to have 3 different bills that you've paid for 1 year. Could be a cell phone bill, a gas bill, car insurance, cable bill, and so on. Then, inshallah, we would be able to assist you. So that is the guideline if you have no credit. Okay. Any other questions? Yes, brother.
The cash out refinance option, is that like a line of credit, or is that just a cash out depending on the equity
Sure. So to answer your question, currently we offer a cash out refinance, not a home equity line as of today. Next year, I may have a different answer for you. But as of today, we, inshallah, right? And that's one of the things, alhamdulillah, at UIF, we're looking to have multiple products for the community in conjunction with your savings account that help with that. That's where these funds come from, to be able to offer these different products, right? This is important as well, right? The more that you have the deposits, the more we can offer different products. Now, with the savings account, right? With the cash out refinance, it is based on the equity that you have in your home. On a primary residence, the maximum you can take out is up to 80% of the current value of today, okay? If it is an investment property, it is up to 70%. Okay? So, yeah.
Anybody else, brothers? Sisters? Fadl. Good question.
That's a great question, and you answered the question, sister, perfectly. It is an add-on, which is the Murabaha model. So let's just say the car is $30,000, and we would purchase it for $30,000, sell it for, let's say, $33,000, and then you pay us back over whatever the time period is, up to 6 years. So it would be the Murabaha model. And hopefully, inshallah, soon, hopefully in 2025, we will have that in New Jersey. That is the goal, inshallah. Yes, brother. The profit rate for? The mortgage profit rate varies. It's been anywhere from around 6 to 7% has been the starting rate. Credit is a factor. Down payment is a factor as well, and property type, right? So, I'm sorry? So, yes, so with that, you have a property type, which is a single, a multifamily, or a condo. You have your credit score, you have your down payment, and occupancy type, as you had mentioned, investment property. Investment property has a higher pricing because it is a higher risk than a primary residence. And the reason is this. Primary residence is somewhere that you're living in, so you usually take care of the home better, okay? And you're gonna usually make sure that the payment is made so you stay in the house. Investment property, many people think that, hey, I have someone paying the mortgage, so it's less risk, so what's the problem? That is true if they're gonna pay the rent. Sometimes tenants don't pay, or the tenant destroys the home, or maybe the tenant is a perfect tenant, but maybe you're having a financial hardship, so you take the money from the rent, you pay your current primary mortgage, and you let that other one go to, distressed property or foreclosure and so on. So investment property rates are going to be higher. Sometimes there's a fee associated with it, a 1% or 2% fee with that, and Mazer can walk you through that as well. Yeah. Yes, brother. That's a very good question. The brother asked, in terms of refinancing, what are the closing costs? So, on every transaction that UIF does, purchase or refinance, we have a processing fee of $995, and then the rest are third-party fees, title insurance, recording fees, your home insurance, your escrow of taxes and insurance. Now, in New Jersey, roughly speaking, your closing cost, not including escrow of taxes and insurance, is somewhere around $4,000, roughly. A little less, a little more, but that's a good ballpark that you can use as an estimate. Roughly around $4,000 plus your escrow of taxes and insurance. You can either, if you have equity in the property, you can roll that into that amount, or you can pay it at closing, whichever you prefer. Any other questions, inshallah, before we wrap up? Going once, twice. Jazakallah khair. I appreciate everyone's time, inshallah. May Allah give you the best of homes and Jannah, inshallah. and may we have a gathering like this in Jannah as well. Jazakallah khair. Wassalamu alaikum wa rahmatullahi wa barakatuh.